Hello everyone, this is the pre-market report video for today 27th November 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, just before our market opening time, US President-elect Trump made an announcement that he is going to impose 25% tax tariff on all import from Canada and Mexico and an additional 10% tariff on China. So Monday night positive US market turned negative in the future market, which in turn made most Asian market to trade in negative. Hence, though Nifty opened positive, it traded in a range bound with a negative bias. On the positive side plus 0.4% and on the negative side minus 0.4%. So I won't consider this as volatility. I personally think 100 points up and down on 24,000 mark index is pretty normal. I would say it was range bound with negative bias and closed marginally negative. So it snapped the 2-day positive rally. Then second about Adani stocks. Already most of the viewers know Adani is now accused for bribery by US SEC. Because of that, yesterday early morning, Moody's cut the 7 Adani company rating to negative from stable, which in turn made all those 7 stocks to fall between 3 to 7%, which is an additional negative sentiment. However, on the positive side, if you see the overall market, actually more number of listed stocks, 57% increased compared to 41% declined. Then second, very important positive, normal FII, not the index fund related like MSCI or FTSE. Normal hedge fund or investment firm FII turned as net buyers. They net bought for 1,150 crore rupees. On the contrary, DII net sold for 1,910 crore rupees. So it looks good to me, but just on the cautious note, yesterday FII trade value was only 60% of their average daily trade value. Please note, repeating, yesterday FII net bought value was not any index fund related inflow, rather genuine fund inflow from foreign investment firm. Sector wise, auto and pharma are the major draggers, down around 1% because of its export dependency on US. On the other hand, IT, FMCG and media increased near 1%. So these are the quick takeaway from the Indian market. Then coming to US, clearly this Trump's new tariff is creating negative wave across the global, especially on the auto stocks. For example, all global manufacturers, Ford, General Motors, Volkswagen and BMW all down over 2%. However, last night US Fed released their last FOMC meeting minutes, which showed that Fed FOMC members signals the continuation of rate cut in the December month also. So the December month rate cut probability increased to 63% from around 50% a day before, which in turn made the US market positive and closed positive. Dow Jones increased by 0.28%, S&P 500 increased 0.57% and Nasdaq up by 0.62%. In case of US VIX, it further dropped by 3.5% and moved down near 14. Regarding oil, it has been decreasing for last 2-3 sessions. Now this coming Sunday is OPEC Plus meeting to discuss about the production for 2025. So oil price was little nervous and traded in the same range as yesterday. At the time of this video, WTI crude trading around $69 per barrel and Brent crude closed at $72.5 per barrel. Coming to Indian ADR, both the IT stocks closed positive, whereas both banks closed negative. Regarding IT positive, we'll discuss in a moment. About the arbitrage, all 4 major ADR except Reliance GDR all indicating furthermore positive. Especially IT stocks both got positive arbitrage of over 1%. About GIFT Nifty, today early morning it closed at 24,255. It's only 2 more days to go for expiry. I don't know why, but yesterday the premium was very high, 70 points. But I expect it to drop 20 to 30 points today, equating that with the spot market indicating 50 points gap up opening. So these were the things happened on the dollar market. Now let's discuss about the Indian market. First, about open interest volume analysis. In the future index market, FI marginally increased the short position from 63% to 65%. On the contrary, proprietary traders reduced their short position to 61% from 66%. Hence, overall open interest volume decreased to 2% and Nifty closed marginal negative. So, yesterday's happening was long unwinding. And please note, still for the moment video time, still both FII and proprietary traders holds over 60% short position, which means they want the market to go down. Then in option market, retail and FII difference is less than 2%, which is an indication they want the market to close flat or within the range bound. On the other hand, proprietary traders slightly favors towards wanting the market to go up. If required, please pause and have a look. This is the overall divergence status. Who makes money or who will lose money on Thursday expiry? Only time has to say. Second, now coming to Infosys. As per NDTV Profit website, Infosys employees received an email stating that they are going to get like 90% of their variable pay. Here, their variable pay is directly related to employee performance and company performance. Hence, market is now projecting this as good company performance and considering this pay as positive. So, even the ADR reflecting its influence. So as a summary, US market closed positive, so global momentum is okay. In addition, Indian IT ADR, GIFT Nifty all indicating the 50 points gap up opening. Moving on, as per stock open interest, Bosch, Coforge, Hindustan Copper, Bajaj Finserv, Lupin, RBL Bank and PVR Inox got an increased open interest along with a negative close indicates the short build up. On the other hand, City Union Bank, Infosys, SAIL, Punjab National Bank and Biocon got an increased open interest with a positive price close, which means these stocks got the long build up. Then about the things to look out, nothing I'm aware of before and during our market hours, but in the night for US, third quarter GDP data, durable goods order, very important PC inflation and crude oil inventories are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 120 points gap up near 24,350 zone, but in the first hour itself, it gradually erased those gains and was in range bound for the remaining session. Then closed around 24,200. Thus on the daily chart, Nifty formed a bearish candle with a small lower shadow, resembling the bearish belt hold candlestick pattern. This is generally a bearish reversal pattern, but we need to wait for the following session for confirmation. In addition, if required, please pause and have a look. Plotted in the Bollinger Band, if you see during the whole downward trend between October to last week, it was always in the lower band. Now, in the last two trading sessions, it had a breakout and moved above the middle line. Hence, in the short term, as long as above the middle line, the trend remains positive. On the lower end, 23,950 to 24,000 might act as the crucial support level, while 24,500 could act as a key resistance level. A decisive move above 24,500 might trigger a further sharp rally. In case of Bank Nifty, it opened 350 points gap up, but it also immediately dropped and was in the range bound throughout the session, then closed around 52,200. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed a bearish candlestick pattern with small lower shadow. However, it maintained a higher high, higher low formation for the third consecutive session and stayed above all key moving averages, which all indicating a positive trend. Hence, at present, Bank Nifty has to hold above 52,000 zone for an up move towards 52,500, then 52,750 level, while support is at 52,000 followed by 51,750 zone. On the options front, the maximum call option open interest was at 25,000 strike followed by 24,500 and 24,300 with maximum new call option writing at 24,400 strike followed by 24,500 and 25,000. On the put side, the maximum open interest was at 23,000 strike followed by 23,500 and 24,000 with maximum new put option writing at 24,000 strike followed by 24,050 and 24,100. Thus, from options data, 24,300 is expected to be the immediate resistance. Above this, 24,500 is the level to watch, with 24,000 being the near-term support. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as not a SEBI research advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.